As part of the ultimate series that I'm going to be doing on my channel, in this video I'm going to be giving you guys the ultimate beginners trading strategy. If you are new to trading and you are looking to get into it and you are finding it hard to get a consistent, easy to replicate strategy, this is the video for you. I'm going to be taking you guys step by step of what you need to do to enter into a trade, exit a trade, and how you manage when you're in the trade. So, without further ado, let's jump into the video. Now, if you are new to trading, which is probably why you're watching this video, you need a perfect broker to go along with the perfect beginner's strategy. And that's why I've teamed up with Longhorn FX to give you guys the best broker. No doubt, if you are new, you don't want to invest too much money into Forex right now. You think you want to get a feel for the water, you want to test the water, and you want to see where it leads before you invest thousands and thousands of pounds of your hard-earned cash. This is where Longhorn FX really exceeds and goes above and beyond, because it can offer you up to 1 to 500 leverage on your accounts. That means if you only deposit £50, you have the leverage of a £50,000 account. Not only that, if you want to flip an account, this is the best way to do it. 1 to 500 leverage from taking £500 to £1,500. If you want to take £50 to £100,000 or £100 to £50,000, a 1 to 500 leverage is the way to go. They have MetaTrader 4, so you can trade straight from your mobile phone. They do CFD trading, they do stocks, they do shares, they do Forex. All of this in one nice, easy place. If you guys want to get an account with Longhorn FX, head over to the link down in the description. So for this strategy, what we're going to be doing is we're going to be looking at a few key factors that will help you take money out of the Forex market on a consistent basis. So the first one is nice and simple, and that is just easy to replicate. And now, when I say easy to replicate, I don't want to make the strategy complicated. You want to do it so you can completely do it on autopilot. You're able to do this over and over again consistently without having hesitation, without having any emotional thoughts. Nice and simple, easy to replicate. The general rule of thumb that I go with easy to replicate is if you can probably teach it to a 10-year-old, then you should be okay. And the strategy that we're going to be implementing will be keeping it nice and simple for you beginners. The next one we're going to be doing is following the trend. If you heard the saying, the trend is your friend, some say the trend is your friend till the end. Following the trend is absolutely paramount, because if you are trying to counter trade trend, it can only end badly for a beginner. Potentially, if you become a bit more experienced, then you can counter trend trade, because you'll know when to get in and when to get out, and when will be the right time to get in and when will be the right time to get out. However, if you're a beginner and you're watching this video, for the time being, if we're following the trend, what we're going to want to do is actually buy when it's going up and sell when it's going down. Identify areas of interest. This is going to be adding our support and resistance, supply and demand, all of these things to give us an indication of where price goes next. So if price comes into an area of support, we're going to want to be looking at that as an area of interest where we can potentially take a buy position. Entries and exits. So we're going to be covering what are we going to be doing to get out of the trade, what are we going to be doing to get in the trade, what is the candles going to show us when we want to get in, and what are the candlesticks going to show us when we want to get out. Rules. This is something that will definitely help with your psychology. Rule-based systems will help with your psychology because it is clear and precise. This means if the market does one thing, your rules tell you to do something else, you may want to get out of the trade. Or if the market does one thing and your rules say to do that thing, you may want to stay in that said trade. With a rule-based system, you don't want to get like 100% win rate, because that's just impossible. But you want to have a positive risk to reward ratio and a positive win percentage rate. It almost got there. And then we're going to be having clear charts. No confusing things that could make our lives that much harder. For example, if we've got our support and resistance, our supply and demand zones drawn on, maybe we've got a couple of trend lines thrown in, maybe we've got a few moving averages thrown in, we don't want to then be adding RSIs, Fibonacci's, all of these sorts of things that could then confuse us, because if we have too many indicators, one indicator says one thing, so say one indicator says to buy, one indicator says to sell. At the end of the day, that's not going to really work for us, and it's just going to add to the confusion, and then obviously that has a knock-on effect on your psychology. So we're going to be keeping the charts nice and clear so that when we know when to get in, there's no confusion, and we know when to get out, there is still no confusion. So being able to replicate this strategy is going to be fairly simple, and I'm going to teach you how to do it. Now, following the trend may be a little bit more tricky for some people, so I'm going to give you some ideas and tips to help you guys follow the trend. And what I mean when I say we're going to be trend following is, if we just get our drawing pen out at the moment, right, what we're going to be looking for is something like this. So if we got a market, it's going to be trading up like that. That's going to be an uptrend. That's going to be a market which is what we're going to want to buy into. That is a trending market. Likewise, if we're going downwards, we want to see something like this, and that's where we're going to want to be selling a market, because that is just trending, just in a different direction. This one is going to be bearish. However, if the market is going sideways like this, not creating any higher highs or higher lows or lower highs, that is called a consolidating market. And ideally what we're going to be wanting to do is not enter into this, because this is where spikes can happen. This is where there's no clear direction, so sometimes buyers will be in control, sometimes sellers will be in control, and that is also the same for trending markets, but it's a lot more clear of when to get in and when to get out with trending markets, and I'm going to be showing you how we do that in just a second. So to help us identify the trend, what we're going to want to do is just go up to here, which is the indicators tab, and then we're going to want to just search on moving average, and it should just be the top one here, moving average, and we're going to click it. So we're going to get rid of this now, and we're going to scroll down, and we should have this nice little blue line. Then what we're going to want to do is we're going to want to just adjust this slightly. So we're going to want to go into our settings tab up here. We're going to want to change the length from 9 to 50. Now you can really change it to whatever you want. However, this is just personally what I found works for me and for this strategy best. So if you do want to change it, by all means go ahead, backtest this strategy first, and then if you feel like you need to make some adjustments of your own, please go ahead and do so. And then what we're going to want to do is change the method from smooth moving average to exponential moving average. We want to change this from 5 to 50 once again. And then we're going to press OK. And what this does essentially is it now takes the last 50 candlesticks into consideration, and it gives you an average of price. So if like this, for example, this area of interest here, and I'll just mark it up so everyone can see, this area here, as you can see, the moving average is going through price action. Okay, that means the moving average is going through the candlesticks. That would what we would consider a consolidating market. So we don't want to trade that because there's no clear direction, and it can make trading a little bit more tricky. So what we're going to be looking for is a market that is trending. So for example, if we take this part of the price action here, what can you see here? That is above the moving average. So we're going to be looking for buys, and it is a trending market. This is a great tool to help you identify the trend. And for entries, it's not the be all or end all, because a moving average is an indicator, and an indicator is a delayed technical analysis. It's not like just trading price action alone. So it is susceptible to price spikes. However, on the whole, you should be pretty much okay trading with the moving average and trading with the trend using the moving average. And then likewise, if we was to just take another example, once again, more trending here. We've had a very bullish run on USD JPY. If you look here, as you can see, price action's below the moving average. So what are we going to be looking for? We're going to be looking for sells because it's below the moving average. So now that we've been able to identify the trend, what we're going to want to do is now highlight areas of interest. And when I'm talking about areas of interest, this is when I'm going to be talking about areas of support and resistance where we think price will start to interact at. So what we're going to do is now load a trading view, and we're just going to do like a mini top-down analysis, so finding our daily zones and then moving down to the 1 hour and the 4 hour, etc, etc. So there's a nice zone right here. So as you can see, this sort of area like that, this will be a bit more of a prominent zone on the 4 hour. And then what we're going to do is we're just going to copy this like so. And then we're just going to mark up the swing highs and the swing lows of this. Okay, that's what we're doing. So at the moment, what we can see is we've now indicated that maybe we want to sell at this price, or maybe more importantly, we want to buy at this price, okay? And as you can see, the moving average is most definitely saying that we want to have a bullish bias. So what we're going to want to potentially do is, once we've highlighted this area, we can want to get into something like this. So that's the daily time frame. We're now going to be moving down to the 4 hour time frame. And as you can see, once again, some nice areas of interest right here. So we've got a nice zone in there. That's just a nice little 4 hour resistance zone, like so. As you can see, prices come down and pushed up into it, come down and pushed back up into it, and started to fall away. And there's something really impressive about the moving average that is just makes it even more of a powerful tool, and that is the moving average can be used as a dynamic support and resistance. So you'll be seeing sometimes, like in here, price will come down, touch the moving average and reject. So you don't want to just solely trade off of it, but if you are in an uptrend, sometimes it will come down to test the moving average and then continue higher, because there'll be buyers waiting in this sort of general area. That's all I can see on the 4 hour. We're now going to jump down to the 1 hour time frame, like so, and we're going to mark up some more areas of interest. So one that I could probably see is this area here. As you can see, it's tested resistance on the moving average. It's now testing support. So we're going to get this zone on like that. So what we're going to want to do now is just look for a trade entry, and this is where we're going to be sort of talking about our entries and exits. We've identified areas of interest, we've identified how we're going to follow the trade. Now what we need to do is work on our entries and exits, and this sort of has a knock-on effect to our rules, because our rules are for our entries and exits. So these two are sort of very similar and sort of coincide with one another. So what we're going to do is we're just going to hit it on replay mode, and what we're going to wait to do is, as you can see, what price is doing at the moment, price is below the moving average, okay? So what we're going to be looking for is sales. Now if I just clear up this chart just a little bit, just to help everyone, and we're going to keep these zones on. And what this helps us do is just identify what happens. So if we break this zone, we'll draw this zone. If we break this zone, we'll then draw this zone up here. Nice and easy. We want to keep our charts as clear and as clean as possible. As you can see, areas of support can turn into areas of resistance. So this turned into support, turned into resistance. We broke through nicely, and then we came back to test again. This area, what happened is we came in for support, we retested as resistance, we had a quick spike out, but we quickly snapped back below. So now what we're going to want to do is just wait for an entry idea. So potentially if price made it down to here, what we could do is just get in for a long position. However, that would be counter trend trading. We want to only look for sales. So what we're going to want to do is wait for price to get into this sort of general area. Right, so now that price has hit our area, what we're going to be wanting to do, and as you can see, it's also found some resistance on the moving average. So we've got two confluences there. First of all, we've got the moving average confluence, and we're also testing into some resistance. So we're going to jump down onto a lower time frame just to see when we want to enter and when we want to exit. And to do this, I'll be on the 15-minute time frame. And I know that some of you may have the question of, oh, the moving average is now like above it, so we should be looking for buys. We always want to go with the higher time frame bias. So whether it's 1 hour, the 4 hour, the daily, whatever it may be, whatever the moving average is doing on those time frames, we want to be doing obviously on the lower time frames. And on the higher time frames, the moving average was above price. So now we're going to be looking for entries. So we're just going to wait and be patient. And this is the perfect entry, okay? So what you can see is we've come into this zone here. Bearing in mind on the 1 hour, we're also testing the moving average as resistance. We've come into this area. We've got a nice bearish candle followed by another bearish candle. So we're going to get our tool out for short positions, like so. We're going to get our entry into here. We're going to have our stop losses just above, and we're going to be targeting this area down here. This gives us a 1 to 2.34. The general rule of thumb is that we want to have anything more than a 1 to 2 risk to reward. That means sometimes if we even lose 2 trades, we can make that back in 1 trade. Anything higher, obviously, the better. So what we've done is we've now identified our entry, which we have on our notepad. We've got our entry, like so. Our exit is targeting this area down here of interest, which is our support zone. And then we've also got our exit, okay? That's what our entry is. So we've got our entry like here. We've got the rejection. We've got the H1 confirmation of resistance and moving average. And then our exit's down here. So that's our entry and exit. And it's also sort of our rules as well. So we're going to see how it plays out. I'm going to take you how I would manage this trade in a live market. And it's actually one of the trades I took yesterday. So we're going to play the replay mode. As you can see, this is always nice to see. Once we've entered, we've got a nice bullish candle that follows. So we're just going to get patient, see what happens. Play it again. Meltdown. This little initial push-up, I can imagine it was to fill some of this imbalance in here. However, we did get to a sort of a minute area of support on the 15-minute. It's probably more of like a 5-minute or 1-minute time frame support zone. Unfortunately, the lower the time frame you go, the weaker the zones get. So this isn't something we're going to want to worry about too much for now. And as you can see, it smashed our take profit. And this is one of the trades that I actually took yesterday. Beautiful. In this trade, 15 or 20 minutes. Done. And then what happens? We're down in here. Potentially, we could rock it up. Like so. And then we came back into our zone again. So that was the trade. That was so simple. In and out. Instantly. 15-20 minutes. That's all we needed. We got out and we made double of what our account would be. So if we was risking 1%, we'd have made 2%. If we was risking 2%, we'd have made 4%. Beautiful trade. Very, very quickly done. We identified the trend. We identified our areas of interest. We identified the entries and our exits. We sort out the rules, and we had a nice clear chart. And we was in this trade nice and quickly. A nice quick winner. All you can ask for. If you have enjoyed this video and you want to see even more just like it, make sure you're subscribing to the channel. Leave a like on this video and let me know what video you would like to see next. But thank you all so much for watching. This is Lukey, and I'm signing out. Peace.